payroll, we get to pay it. So on that example earlier, let me go back to it. We had cash coming out, and these are the bottom numbers across the bottom of our this long chart, our payroll register. We had wages 6035. We had, of course, we had federal income tax too. We had Social Security of 312.17. We had Medicare of 87.51. Of course, we had all of these other things too going on. We had health insurance, and we had United Way, and we had a minus over here that was the net pay to all of our employees. Remember that? Well, now it comes time for you to match those two. So how are you going to do that?
Put the numbers on the payroll.
You're going to do it again. Right? And whatever those two added together are, it's going to go right there.
So you would add Social Security
You add your Social Security and your Medicare, which is 312.17. No, you don't help me, 7, 8, 5, 6. Is it 399.68? Something like that. But do you see how you're matching this dollar amount? I probably did it for the moment.
Are you supposed to add all four numbers?
No. Just two.
Oh.
See, you're matching that. That's already been accounted for. So you're just doing it again.
No. That's not it. 399.98.
399.98. Okay. So it doesn't matter. We got the gist.
It's one of them.
Okay. Do you understand how that came about? Because
Yes.
you were matching. These two were FICA, right? Those are the two arms of the FICA, federal insurance. You're matching that, and it's going in their names.
So you have to match FICA.
You match FICA.
Okay.
That's right. You're going to match, and you have to match both sides of it. You also have to pay two other things. This is kind of a little bit confusing, so hang on with me, okay? Real fast. It won't take us long. But it's called unemployment. Right? And guess what? The employees didn't have to pay any of that. So you can't look at this payroll register really, but you do have to look at it because you only have to pay in unemployment up to a certain dollar amount. So do you remember how we had the ceiling? Can I erase cash over here? Because we're really not using it anyway. Remember how we had the ceiling on Social Security of 110, 100, or the maximum earnings, and we paid 6.2% till we got to that point, right? Well, on unemployment, it's way down here at $7,000. You only have to pay unemployment taxes on each and every employee that you have until their gross pay gets to $7,000. And when they have $7,001, anything over the top of that, you're done for the year. So this will be an early tax that you'll be figuring in January, February, March, that kind of thing. And then you're finished until the next year for that. Now, you have two branches of unemployment that you have to pay for, okay? You have to pay for federal and you have to pay for state. So that means that you have federal and state tax payable. These are also payables, all still under the world of liabilities here. This is federal and state. Now, there is a percentage that you're going to have to pay on this up to $7,000, okay? And it changes all the time. I shouldn't say all the time, but it is absolutely a changeable thing. And the part that's kind of weird about it is that both of them together have to equal a certain percent.
6.0% on a maximum of $7,000. But you are credited for 5.4% for any state. Now, it could be that your particular state doesn't have any state unemployment, and if that's the case, then the whole 6% is going to federal. It could be that your state only has 2%, and if that's the case, then 4% is going here. So the total cannot be over this amount, but every state can set their own. The homework says 0.6, is it a typo? 0.6%. Well, if this was 5.4%, then only 0.6% would be here. Okay. Because these two added together would equal this. Is that what it is? Yeah, that's what it is. Okay. But if this one was 4.4%, then this would be 1.6. You see, added together. All right. So but you don't have to really worry about that in your class work because it's going to be given to you a dollar amount. Just like Ashley said, she's working on the 9,000 right now, and this is the dollar amount that's going to be changing. And of course, this book was published last year, so you never know. And especially the way our Congress is working right now. Yeah. But anyway, so for your problems, I think that it's going to be 7,000 at a total together of 6%. Now, the employee does not pay these, only the employer. Okay? So they're also going to be a payable. So we really have, let me get a different one, it's getting really fancy on the board. We really have this one, this one, this one, and this one, right? So all of those can be added together to match this one day. You don't have to just put just that. You can just make one big journal entry that's going to have your Social Security tax payable, your Medicare tax payable, your FUTA tax payable, and your SUTA tax payable, all in with one negative for your payroll. You want to see what that looks like?
Yes, please.
So your journal entry then would be payroll tax expense, and then all of those payments. Your Social Security tax payable, Medicare tax payable, and then you have to do that. And that is taxes that you must pay just because you have employees working for you. The rest of this chapter talks about how do you go about, now that you have collected all of this money, and you have all of this stuff that you owe, how do you go about paying it? Well, of course, when you pay it, especially when you're paying the government, everybody has to be paid with a form that's going in at a certain time, and it's all based on how big is your payroll as to how often that it has to be paid. If you have a large payroll, they want you to pay it like tomorrow. If you have this kind of payroll, you know, oh, well, I'll take it to the next quarter. I do it every quarter. Every quarter. So if you look over here, I'll throw it up here so you can see it. In your ebook, there's going to be a little chart that says if you accumulate a certain amount of tax liability, when is it due? And now there's a word that's going to be confusing to you here, and it's the word deposit. This isn't a deposit into your account. This is you depositing money into the federal or state government. That's who's getting the deposit. It's not coming to you. So let's say if you're in a business and you've accumulated less than $2,500 in all of your payables, then they want you to pay that at the end of the month following the end of the quarter. That would be 3 months, the end of that next month after that third one. But look down here, if your payroll liabilities, all of those things that you owe, is 100,000 or more on any day, they want you to deposit it by the end of the next banking day. Okay? So, it depends on how big it is and when it has to go in. And there's all of these forms and things that has to happen. Well, when you pay it, we're really not going to be too worried about the forms, but I am concerned about your journal entries that would go into it. When you pay a bill, what happens to your payables? It goes from a credit to a what? A debit. You see all those payables? They're all debit. And what is that cash? When you pay cash, cash goes down with that credit. You see that? And notice there that they pay the employer federal income tax, and they pay Social Security, and they pay Medicare all in one check, because it's all going to the government. You have to pay that. But you know how to pay it. Anytime you pay something, cash is going to be credited, right? So let's just take a look. Do you think that you could have come up with this one on your own without me even showing you? I think you could. What is my FUTA tax payable? FUTA tax payable. You see how that liability is going down with the debit?